So today I was hosted by Mtaani Radio in Nairobi. It is in Kabiria, and we discussed the issues of public debt. And I did not get a chance to record, and I think now I should record an episode for you, just to highlight some of the public debt issues here in Kenya, and what is the impact of the public debt we have here in Kenya. So it is estimated that by June 2020, Kenya had a public debt of 6.6 trillion Kenyan shillings, which meant that by that time, every Kenyan had owed our creditors 139,000 shillings, and still the government continues to get access to more loans as time goes by. Further, some information from the Parliamentary Budget Office, that by September 2020, that is June, July, August, September, that is 4 months later, actually 3 months later, Kenya's public debt had increased to 7.12 trillion, and that was 65.5% of GDP, or 79% of the BFM debt ceiling. So public debt or excessive public debt has consequences, a lot of consequences actually, and those are some of the things we highlighted in our discussion this morning with Amadi Amata of Mtaani Radio. So we talked about sovereign debt defaults. That's a likely scenario. This is when a country fails to make its debt repayments in time, or even completely fail to make those debt repayments. And this calls for payouts of national corporations through getting loans from International Monetary Fund or the World Bank Group. Those are multilateral organizations, or even from bilateral partners, like countries like China, which give loans to other countries, German, USA, among others. So there is these payouts have been done in the past for countries, for companies in the US and other parts of the world. The second thing which would happen if there is a sovereign default, or if the country fails to pay its debts, is that there will be a withdrawal of foreign investors. So those investors who have come from other countries to invest in Kenya, they will start withdrawing from Kenya. Then there will be devaluation of currency, because now you see the devaluation of currency comes in because we have to purchase a lot of foreign currency to repay, for example, external loans. So at the end of the day, we get the devaluation of our currency. Then the second scenario is debt crisis. This means that more debt than we have, a scenario where we have more debt than we can actually pay off. It is said that from around 70% of gross domestic product, that is a situation where now the debt becomes unsustainable. And in most countries, when there is a debt crisis, these countries print money to repay those debts, and you know the consequences of printing currency. We would have a lot of currency in the market, and this currency will lead to devaluation of our currency, of course. The third scenario is getting into austerity. Austerity is a situation where government cuts its expenditure in order to be able to repay loans from other countries, from multilateral agencies, or even domestic debt. The fourth scenario is where banks will collapse, but not only banks, but various businesses will collapse. citizens, for example, if banks lose their, or if they corrupt, citizens will lose their life savings. This happened in Iceland in 2008 when banks collapsed. Actually, they were allowed to collapse instead of bailing them out. And later on, of course, they recovered. We also have a scenario where our country will lose strategic public assets, for example, the port of Mombasa, which has been alleged to be used as collateral for Chinese loans, for us to get Chinese loans. Although this is not confirmed because the agreement between the government of Kenya and the Chinese government or Chinese partners has never been made public. So you can imagine that some of the assets in Kenya have been placed as collateral. Collateral is what we call security. So we don't know, we are not very sure, because there is a lot for you to see. I'm going to do that right now. Let me show you that the office is sleeping on its job, which is provided for in the Public Finance Management Act. So I will go to the National Treasury website, and I will search for public debt. I think now I should move up. Window capture, okay. Okay, so I will open the National Treasury website, and then I will search for public debt register. It's called debt register. The reason why I'm searching for it here on the National Treasury website is because the Public Debt Management Office is an office under the National Treasury. So if I search public debt register, what will come out? Let us see. We have external public debt register. Okay. If you open, you will see that the most recent, of course, they have been updating. They updated 2009, 2012, 2015, 2017, and now 2018. That is the most recent. So if we open the one for 2018, what will we see? What shall we see here? 2018. Okay. I need to make this bigger. Okay. Then I make this one smaller. Yeah. That Kenya has external loans in form of sterling pounds, US dollars, euro, and other currencies. Total outstanding as 30th of June 2018 was 2.4 trillion. Then there was internal loans, was 2.3 trillion. Total in 2018 was 4.8 trillion. So that has increased, as I indicated. By June 2020, it was 6.6 trillion from 4.8 trillion in 2018. And then by September 2020, it was the loan was 7.1 trillion. 7.1 trillion. That was the case. So basically what we have is a mess. The loan has been increasing each and every day since 2018 under the leadership of the current administration, which is so unfortunate. That is so unfortunate for other people. So Rwanda failed to pay their loans in 1995. South Africa, which is is it the second largest? No, it is the third largest economy in Africa, failed to pay their loan in 1985. That is 36 years ago. Zaire under Mobutu Sese Seko. Zaire of Mobutu Sese Seko Mobutu, the man who has been praised in Rumba songs by Franco, failed to pay their loans in 1979. It seems they had a crisis. They had a crisis at that time, so they could not be able to pay their loans. So basically in Kenya, the Public Finance Management Act provides for an office at the National Assembly which advises the members of parliament. So this is called the Parliamentary Budget Office. So basically their work is to do analysis and also provide guidance to members of parliament so that it can guide what they discuss in the National Assembly or in the Senate. So this Parliamentary Budget Office does a lot of analysis, and one of them talks about the stock of debt, which is projected to double by 2030. By June 2030, we are likely to see the stock of debt which we have, which was 7.12 trillion by 2020 September. It is likely to double, so it will go to 14.2 trillion by June 2030 if we go at this rate. That's a projection. Debt service will cross 1 trillion mark in financial year 2021-2022. So 2021 will start from June this year to June next year, which is in 2022, and the debt repayment will have reached by 2020-2021 it was 925 billion. So by end of 2021-2022 the debt will have reached 1 trillion. So we will be paying out 1 trillion by the end of the next financial year, which means that if we have a budget of 3 trillion, 1 trillion will go towards repayment of public debt. The analyst at the Public Budget Office also talks about the universal healthcare coverage, which is one of the big four agenda of the Uhuru Kenyatta administration, whereby they want to make sure that everyone can access healthcare. And then these analysts are proposing that a number of things needs to be done in order to completely or fully roll out the universal healthcare coverage, which was tested for 1 year as a pilot program in 4 counties, including Kisumu, Nyeri, Machakos, and Isiolo. So what happened there? Over 1 million Kenyans enjoyed healthcare services. This means that there were more people accessing healthcare services due to UHC compared to the previous periods, because that shows that it is the cost of accessing healthcare which is a barrier. Otherwise, people could be accessing healthcare more frequently. So they are saying that UHC lacks a guiding policy for coordination and enabling monitoring and evaluation, and then there was no proper costing to facilitate a complete rollout. That is why we have seen the rollout being stuck. So right now, when you go to a public hospital, you would have to pay for your own medication. There's no insurance if you don't have one to pay for you. So they are proposing a number of things to be done in order to successfully achieve the universal healthcare coverage. One of them is that NHIF should be made mandatory for Kenyans, all Kenyans aged between 18 years and 18 and 65 years. Those above 65, they are suggesting that they should be supported by government to enroll under the NHIF through an annual capitation grant. Okay, this universal healthcare coverage, the other name for it is NHIF, from what we are seeing in government documents. Anyway, so the second thing which should be done is that we should fast track, our government or the state should fast track reforms to enhance efficiency at the NHIF and the KEMSA, which are the 2 critical institutions at the center of successful UHC program. NHIF, we have seen previously alleged cases of corruption including leading to termination of employment of the CEO or chief executive officer, the former one. And then at KEMSA, we have seen corruption scandals, like people saying that they were walking outside the main gate of KEMSA, and then they saw people getting into KEMSA to get contracts to supply drugs. So they went inside and they were given contracts worth millions of Kenyan shillings. So there needs to be reforms to ensure that there is no corruption at the NHIF and also at KEMSA for us to achieve the goals of universal healthcare coverage. These are critical institutions in that process. They are also calling for investment in research on the use of herbal medicine or alternative medicine to complement the conventional drugs or medicines. Basically, that's an highlight of what is happening here in Kenya. Let us meet in our next episode. See you.